All right, ladies and gentlemen, I hope you had a wonderful day. It seemed like it was a quiet day in the markets, but we actually moved quite a bit, continued the down after last week, breaking the streak of greens, but everywhere around the world sold off to come back from the holiday. China didn't do good. Europe ended a 4-day streak, and now everybody is asking, what are we doing for the rest of February, and what is tomorrow with Nvidia in the minutes gonna bring? So, Chad, we got a lot to talk about. I'm gonna go over what we need for tomorrow, what we are expecting for the minutes, a little bit about Nvidia, but then we have to talk about what happened here after hours. Amazon was added to the Dow Jones. There's only 30 companies. They decided to remove Walgreens and replace them with Amazon. So now Amazon is a part of the Dow to represent the economy. And the reason why, they said it was because of Walmart's stock split. That's going to change how some things are valued. So they thought they would make some changes and replaced Walgreens with Amazon. And then even the Dow Jones Transport Index, they replaced JetBlue with Uber so that they could have the index now reflecting some sort of the ride-sharing economy as far as transportation goes. So that's pretty big news after hours. We'll talk about it when we get into the plays, and we'll even see tomorrow. But now our work is cut out. We got a little bit of data. We're going to get a big earnings on Wednesday, and now, too, this market momentum is something we got to talk about. So, Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, there's a lot we could talk about with the market and even some of the stuff after hours, but I want to start here with the minutes because you have to understand the minutes tomorrow have the ability to move us. This is something I've been explaining the last couple of days here, and it's very hard to put a finger on it because the last, I want to say like 5 or 6 minutes. If you ever go to the Fed website, you could go pull up the meetings. It'll tell you the minutes day, January 3rd, November 21st, October 11th. If you pull out the daily, you'll see like January 3rd, we barely moved. October 11th, I remember that one. I forgot the November one. We barely moved. The market did go down a little bit, but you see how things have changed. But I'm telling you, if you go back all the way to the days, I believe it was like July 5th, that was the last time that we actually saw a move last year, and it was like a baby gap down on the Fed minutes, and then ultimately you went up, and then you moved a little bit into the lows on one of the Fed minutes in August. The point I'm trying to say here is that usually the Fed minutes does not move us. Why? Because most of the data is dated. If you even think about what's happened lately, even last week we've been saying watch for this little story change and what's been going on. That has been inflation on the rise back up, or the data not coming down as easy and fast as some would like here. But the main point about all of it is that it has been the recent data that has actually been moving us. So the minutes is not recent. The only thing about it is that there has been times throughout the last year where the minutes are a shockingly or a stark reminder of how hawkish the Fed actually was. Pretty much any time that the minutes were important, there was one of these big premature shifts in rate cut expectations. A lot of that happened last year and then a lot less towards the end of the year. So this is where tomorrow is going to become important because it has the ability to move us, but just as easily it could do nothing. And now Nvidia, there is a ton riding on that. We talked about it a little bit yesterday. Even coming into the morning, though, this has been a big thing, and investors are saying we're waiting for Nvidia. There's a lot of hype around the AI, even though we've wrapped up a lot of the earnings. People want to see if their streak is going to continue, what it means for some of the future growth prospects. But the way I'm breaking it down right now, it's very simple. The minutes tomorrow, they have the ability to move our policy, move move rate cut expectations. It is going to be big on the policy side. But what have we seen over the last 2 months to start the year? The market can ignore policy, whether it benefits or doesn't help out what the market's doing. The market has been in its own world with all of these tech stocks, and that's why I'm saying NVIDIA, that's going to affect sentiment and inflows and outflows more than anything. So we have to watch both of these tomorrow, see how they play out. The thing about tomorrow, I guess I could break it down into a little bit of what we had today. I will explain, or actually I need to go to the end, but this is related to tomorrow. Watch if tomorrow is actually a meaningful set of data. The market could start a new trend if the minutes are very impactful and people don't like NVIDIA. That could start a new trend here to end out the month and get people kind of reacting to what we've seen negative lately and start building a narrative coming into the Fed meeting in March. But for all of this to happen tomorrow, we need something meaningful. So it's going to be a toss-up because tomorrow, the minutes, if it's not anything new and it's kind of the same speech, maybe it's a little bit of a hawkish surprise, but nothing that changes people's expectations too dramatically. NVIDIA earnings is good, not dramatically better, not dramatically worse, but still up there. Well, where does that leave us in terms of finding a direction and the momentum after now we are kind of slowing down after hitting high after high and then breaking this trend? Otherwise, it's either we continue that uptrend if everything supports, or we're going to have to kind of wait and see what the story being built is until March of what we're getting. So keep all that in mind. Tomorrow's going to be our first event. Again, you get a double header there with both NVIDIA and the minutes, so we'll see how that plays out. But now, as far as everything else and what happened today, this is something to just get an idea and handle of where we're going. A lot of people were asking, is this good, bad? And some people felt how we were going down, but just the weird part about everything is like we're just kind of back to those CPI levels from a couple of weeks ago. You're not as low. You're actually a little bit higher towards like the low end of today. You were pretty much where you opened after the CPI day, but you go look at the bonds and everything else, they've kind of all made their move back to these levels. Even the VIX, that thing has climbed now back to around the middle of the day or end of the day of that CPI, but that was still a big move there. So the point is, we just basically moved back around to that volatility level the other day, and I don't really think the volatility ever went away. Now, we did move down a little today, and you're getting people reacting, but the market is still in that uptrend that we have been on since October or November. But even on the short term, we still got to figure out a couple of things here. So I do think that volatility is lurking. We got to find out. We have these little events now moving forward. We are going to wrap up earnings, and then before you know it, next week we'll bring more important data, then more important data, then before you know it, again, February's over, then it's March, and end of the first quarter. So I hope you're ready, but Chad, let us get into the plays. So right off the bat, I got a couple of different plays. I think all of the plays today that I'm going to go over are plays that I made moves on. We did do a couple of earnings plays. Be there tomorrow, 11 a.m. Pacific time, but we will be going over those earnings previews, NVIDIA, and a couple of others. Rivian, I think, are going to be tomorrow, so we'll have that all on stream. But the first play I'm starting with today, GFS and Intel, I made a play on both of these today, and the reason why, it is related to NVIDIA earnings. They're all in the chip space, but also they both got their own little news today. Pretty much Intel and GFS, they got news about funding, or the CHIPS Act funding some of their stuff. I don't know if they were both on the CHIPS Act, but both of them went up today. GFS was up like 5% in the morning, came back down almost break even. I added shares because the options were kind of expensive. I grabbed 100 shares, I think at like 54.20, and then I went for an Intel play because I was thinking, well, if they have this news, they were up like 3-4% pre-market, sold off pretty hard, and I figured with NVIDIA, they may get a little bit more of the juice. So I did grab those Intels in the morning. I went with the March 15th $50 calls, two of them for 39 cents. So almost $80 for two of them just on the call side. A little bit expensive, but we could sell those out either before NVIDIA. But the way I'm looking at it, NVIDIA, we're going to price it in tomorrow, see what there is. But I really do think the sympathies and some of these other plays, related, not related, some that I've already reported, they may be a better area to look at. But after NVIDIA's earnings, once we get that data, it may be a better move, but we'll see what we come up with tomorrow. We'll be doing that live on stream, but that is play number one. Then play number two Amazon, baby. This is the big news. They're going to replace Walgreens on the Dow. We already told you that here, but there is usually a small little window after being added to the Dow where you outperform. I believe Honeywell, I want to say that was the latest one. Was it Honeywell? I think it was Honeywell or not Whirlpool, one or the other, but they got added to the Dow. They kind of held up there for a little bit. Sometimes it can go lower and return after a year, but the point is, this is good news. This change is going to take place on February 26th, so there's still a little bit, even on the impulse or the addition, the day it actually gets added, the first trading day, there may at the very be a little bit of a boost, so watch out for that. And like we said, Amazon, that is one of the only ones that has yet to break out from those all-time highs, so we'll see what that one ends up doing, but that is play number 2. Watch out for that tomorrow with momentum. And then finally, play number 3, I made a play on Pfizer today, a smaller option play. I think I spent $20 for 2 of them. That way we could sell one out and make it free, but I grabbed the March 30-50 calls, 2 of them for 12 cents, and the idea here was that Pfizer was coming up today, and the market wasn't doing too hot. It was kind of an outperformance with Pfizer, Abivi, a lot of other healthcare names, so I was looking at it, I said, I like the outperformance, and then Pfizer, they were getting back up to their high there from earnings before they sold off. This is what I'm calling that earnings momentum. If there's been a couple of names out there that have reported and hit a level on earnings and haven't been back since, and they start testing it, especially when they're outperforming, that is usually going to be a good sign. So that caught my attention there. Thought we'd make a play. Purely momentum. Maybe we get lucky if tech slows down and you get a little bit more of that healthcare rotation. Other than that, though, going to watch this play, not exposed to it too much. So we'll see how that plays out. Besides that, as far as any other plays, I sold out of gold. I had those micro contracts, got like $600-$700. We made a Palo Alto flip on a pre-earnings, ended up taking like a $30-$40 loss on 2 contracts, but didn't play the earnings there. And then we made a play on SMCI. I grabbed a weekly for 50 cents. This thing went up 100% at one point, or 200. Came down. We're actually still up on it, but I thought I'd take a weekly gamble. This one's a weekly, but it was the only thing of semblance of cheap, but still 100% out the money. But we won't talk about that. Then I made a play on Caesar, then Neo, then VRT, and then ADI, and then Wix. We did a small $5 play, but these are the ones we priced for the earnings for today and then tomorrow. We'll see how tomorrow plays out, and I will give you a recap probably by the end of the week how all of these played out, because earnings season is now wrapping up. But Chatadonia, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, everything is a circle. Life moves in cycles and circles. Everything is all about understanding cycles. Don't make a permanent decision in a temporary spot in the cycle. And keep that in mind for your planning, both good and bad. But Chad, I love you. Drink that water. Stay hydrated and healthy. I will see you in the AM and horn.